If you take the long view between now and 2030, investment in data center capacity is going to keep building.
Investors looking into AI investing as a long term play could find some recent dips worth watching.
They changed the name of the company, and the market said, wait a minute.
Longtime Wall Street veteran Marc Chaikin dives into three companies that are powering the AI revolution that have all cooled off lately.
This is the way you want to enter the market, on pullbacks, not at new highs.
Mark, so great to have you back on the show. It is always great to talk to you and get some of your insights from the power gauge and just from your long experience in the market. I want to start by talking about the tech sector right now. AI has been the story all year, really the last 2 years, but it seems like this bull run really has no end in sight.
Well, there are a lot of skeptics who've cropped up in the last week and a half, starting with Mr. Burry, the big short from 2008, casting shade on Palantir and NVIDIA, and lots of press for the naysayers. And so we've seen a correction or a pullback, but in some cases, some pretty significant drops in the AI infrastructure stocks, particularly the people who are helping to build the data centers that are necessary to plug in the chips. But I still think tech is the place to be for the balance of the year and into the first quarter of 2026.
Yeah, and those pullbacks are going to be a part of the story we're talking about today with the three stocks that you have for us in tech and in infrastructure. Before we get into these names, I do want to have you talk a little bit more just about how earnings season was for the whole tech sector and some of these stocks that might be pulling back from headlines right now. Did they have a strong showing during earnings season?
They really did. Earnings season was good almost across the board. S&P year over year earnings came in at around 12% increase, and the expectation from analysts was 5%. But it wasn't just tech, it was across the board. Consumer discretionary stocks, even some consumer staple stocks. But it's the tech sector where they really knocked it out of the park. The problem was the reaction to the earnings. The expectations are so high in the marketplace right now that even the slightest hint that maybe things are not going to proceed as quickly as possible resulted in haircuts of 15 to 30% on some of these names, which is really crazy, but it reflects how valuations have really gotten sky high, particularly driven by the retail investor who's come back into the market in a big way.
Yeah, in a really big way. And this is exactly the kind of names that our viewers are looking for all the time, are these stock ideas of stocks that might be down a little bit right now, might be having a little bit of a pullback, and could have some potential in the future. Before we dive into the list of the three names you have for us in tech today, just a reminder for our viewers, these are not buy recommendations. These are not financial advice. We are just giving you some stock ideas and some good information so that you can continue your own research on these stocks. Well, Mark, let's dive into the first name that you have for us today. What's the first company that you're looking at in tech right now?
Well, I'm looking at Qualcomm because when you look at AI, there are basically three tranches of companies that you can invest in. One are the chip producers, from NVIDIA to AMD to Qualcomm and on down. The second are the companies in the construction and engineering and the power business that are helping to build the data centers because you got to plug the chips into something. And then, of course, the third are the companies that are going to use AI to improve their business, either in customer support or in supply chain management and so forth. But let's start with Qualcomm, symbol QCOM. On October 27th, Qualcomm announced that they were getting into the AI chip business. Now, Qualcomm is an experienced player in semiconductor chips, and even before that announcement, we were bullish on Qualcomm. The reason being that they made an acquisition about 3 or 4 years ago, not a very expensive one, maybe $1 billion or $2 billion, that enables them to compete with Apple in that next generation PC chip. And the market really hasn't given them enough credit for that. But then on October 27th, they announced that they were getting into the AI chip business. The stock spiked up over 30%, maybe 35%, and it's now pulled back. So it's pulled back from 210 to a low of about 165, and it's trading in the 170, 175 area. I think that for a chip play that's less sort of obvious than NVIDIA and AMD, which by the way, also made waves this week with a big announcement on AI chips. I think Qualcomm is very attractive from a long-term point of view. And by the way, these three recommendations fit into my roadmap for the balance of the year into the first quarter of 2026, which is a strong year-end rally predicated on this being the first year of a presidential term and the fact that we were up 10% heading into November, which historically gives you very high odds of a strong finish for the year.
Yeah, so interesting to look at what this year has done in the market. We've seen so much growth and some explosive growth in stocks, but Qualcomm is interesting because I know you talked about that big spike it had, but looking at the chart right now, compared to some of the other names in tech, it hasn't had some of those gigantic moves that, the 200% growth stories we've seen in some other AI related names. Do you think Qualcomm could be headed for that in the future, or what would it take to see some kind of a move, a bigger move in Qualcomm's chart?
We did see that big move with the spike up on the announcement on October 27th. I don't know where the max out price is. What I do know is that we like Qualcomm a lot. They're putting chips into handheld scanners that Zebra makes that go into warehouses and supermarkets. So Qualcomm is a way to play nuts and bolts, semiconductor, AI, and now AI chips. And I think the upside, the market will determine that, but it's a really attractive buying opportunity. Anytime you see a stock spike up on news, pull back, but hold the level that it was at prior to the spike, that's an attractive time to be looking to buy at.
Yeah, it's an interesting story for Qualcomm, a big change in the business too, which I think is interesting to see for this company. Thanks for bringing that name as a good infrastructure buy in the AI world. Let's move on to the second company that you're looking at in tech right now.
Second company we're looking at is Vertiv. The symbol is VRT. The Vertiv makes a whole suite of infrastructure, cooling, and sort of thermal management, power management solutions, very critical to building out data centers. So there are a lot of headlines recently about how the data center build out cycle may hit some snags because of local unavailability of power, because steel might not be available. The bottom line is you have to plug the chips from NVIDIA, AMD, Qualcomm into something, and that something has to live in a data center in order for the large learning models to access it. Vertiv has been a wonderful stock that we've liked for a long time. It's now pulled back dramatically to long-term support. This is the way you want to enter the market on pullbacks, not at new highs when everybody is excited and a little bit of animal spirits are in the marketplace, as Alan Greenspan might have said. So a VRT we think is very attractive here. By the way, all three of these stocks have bullish power gauge ratings. Our 20-factor quant model is bullish on these stocks, which means that the fundamentals are lining up. And right now, as these stocks have gotten oversold on a short-term basis, the technicals are kicking in as well.
Yes, and you can find that full power gauge report for all three of these stocks. We have a link that you can get a little bit more research, get some more education on these stocks, and see what the power gauge has to say too. So you can scan the QR code or go to that link in the description of this video if you want to continue your education on these three stocks. So Mark, let's get on a little bit more on Vertiv. I think one thing I want to talk about is the competitive landscape for data centers. We've had many stocks on this channel talked about many different data center stocks in different areas of data centers. But do we expect to see competition or too much competition being a factor for Vertiv and other similar stocks?
No, actually, I mean, competition's always possible, but people need to realize that the demand for data center capacity is far outstripping the ability of the companies to put these, they're really big, huge warehouses with computers in them in place. So even if someone has a better solution, companies who are building the data centers, the CoreWeaves of the world, the other big players, the intermediaries who are building data centers, they can't waste time looking for a slightly better solution. So companies like Vertiv, also companies that are in the power generation business, building power plants. There's no time to look for a slightly better solution. These are proven solutions. they're working, and the demand for these companies' products is just going to be there for the next 5 years, I believe.
Yeah, continuing the conversation just a little bit more about earnings season, did we see that continued investment? I think some of the naysayers on data centers and the future of AI are punishing companies potentially for all of their big investments into data centers. Are we seeing that play out? I'm just curious what we're seeing in that investment, what came out about the investment into data centers this earnings season.
That's a good point, Bridget, because I'd say Meta was the poster child for that. But they're sticking to their commitments. So you've got five big hyperscalers: Microsoft, Meta, Google, Amazon, and call it OpenAI because they're everybody's investing in them. They're investing in everybody, and there is no pullback right now in commitment of capital. In fact, the big story in earnings season was Meta borrowing, I think, 20 to 30 billion dollars at very favorable interest rates to fuel and fund more data center investments. And not only are these companies investing free cash flow, but they're starting to borrow money to do that. Now, that's part of the reason the market got a little bit upset because they're now comparing the leverage that's being used to the leverage that was used in 1929 to expand companies to the leverage that was used in 2008 in the mortgage-backed securities business. Maybe that plays out and there's a pullback at some point in 2026. But if you take the long view between now and 2030, this investment in data center capacity is going to keep building.
Really great conversation on that, Mark. Thank you for diving in a little bit deeper in there. That one. Let's go on to the third stock that you have for us today.
Nextracker. Nextracker is in one of our newsletter portfolios, has been for quite a while. Nextracker makes equipment that enhances the ability of solar power to deliver energy. And the market loved that story. Now, guess what happened to Nextracker? Bullish power gauge rating, making new highs 3 days ago, new all-time highs. They changed the name of the company to reflect the fact that they wanted to get more involved in the broader renewable energy market. And the market said, wait a minute, we're buying you because of solar. We don't care about wind or whatever else you're going to do. That's really crazy. And so you've got a big pullback in Nextracker just because they changed the name and said we're going to broaden our focus a little bit. So this shows you how absolutely manic the market is about data centers and very specific companies that have a niche in there. We think Nextracker is very attractive, having come down about 15 to 18% from a recent peak. So again, take a look. I love the fact that we have these three research reports up. And by the way, once we sort of finish our discussion on Nextracker, I'd like to put this whole AI boom into some sort of context for our viewers.
Yeah, please.
If you think of AI as the next big shiny object, that's scary, right? Because we know that whether it's Bitcoin or whatever blockchain or any of these sort of concepts, that there is a risk that they're hyped up. If you think of AI as an extension of the digital information revolution, started with better chips in the 90s, internet access through the Netscape browser, cloud computing, GPU chips from NVIDIA to enhance computing power. AI is just the extension of the digital revolution. And what is the digital revolution? It's crunching more data faster. And right now, they're building large learning models that need data crunching. They need fast compute and heavy compute power. So let's not think of AI as a fad. Let's think of AI as just an extension of the digital information revolution. And we all know what that's done for our lives, starting in 1960 and the first PC in 1980 from IBM, Apple before that. Think of what's on your phone.
Right.
That is the digital information revolution encapsulated. And there's going to be more compute power needed for the next I don't know, 5 to 15 years. Will there be hiccups along the way? Absolutely. The bear markets are inevitable. They come every 4 or 5 years. But from a long-term point of view, AI is real. AI is going to be a fact of life, bigger and bigger and bigger, and on phones. So it's not just going to be on big computers.
Oh, such a good perspective on that, Mark, because I think there are many investors who have that fear right now because this AI market is running the whole market up so much right now. The fear of, is this a fad? Is this a short term thing? Is definitely present for many investors. But you explained it well. This is a long term, life changing investment in technology that's going to not only affect the market, but our daily lives. It will be very interesting to see the changes. What's the new cell phone, right? What's the new thing that everybody's carrying around with them or has 5 or 10 years from now? It's kind of an exciting time, right?
I'm really excited about the future, more so than at any point in my investment career, and it goes back a long way.
Very good, Mark. Well, thank you so much for this discussion today. So many great points. And again, always great to have your knowledge from the Power Gauge, which is your really unique system and unique way of looking at stocks. Again, you can take a look at the 3 stocks we talked about today and see what the Power Gauge has to say about them. It's just more information, more research for you to really dive into these stocks to see if there's something that you're interested in too. You can scan the QR code, click the link in the description to get that Power Gauge report on these 3 stocks from Mark and his team. Mark, thanks again for your time today. Always so good to talk to you.
Yeah, this one was really meaty, Bridget. Thank you. You bring a wonderful enthusiasm and perspective to the markets.
Yes, we love having you on, Mark. Well, let me know what you think in the comments, everyone. Are you looking at these infrastructure plays? Do you believe in the long-term value of anything related to data centers? Or are you a little bit more skeptical on whether some of these stocks are running up too high, too fast? I'd love to hear from you in the comments. Thanks again for watching, everyone. As always, happy investing.